So I'm bringing back a school of sniper entries. This is where I typically go to my day-to-day trading or setups that I've took in the past, and I teach you from those trade setups. And of course today I'm going to be going through a gold setup that came up after losing gold on NFP, as well as a NASDAQ setup rather, where I took it so beautifully, even sells on NFP. I did capitalize. I'm also going to talk about the break of correlation. Many of you are following our strategies did see that correlation, positive correlation between gold and NASDAQ actually being broken off, going opposite ways. But nevertheless, I'm going to break it down, and hopefully by the end of the video you can take tips from my own trading and apply it in your daily life, and hopefully be profitable from that type of education. Let's jump into the video. Okay, so we are on gold right now, and I just want to jump straight into it and break it down for you. So on NFP, I predicted that gold should actually sell. It did eventually sell, but not at the impact of NFP, in correlation to rather NASDAQ, of which I had sold, and it was a very profitable trade on that end, where we actually entered sells on NASDAQ. USD JPY, I predicted it should buy, and it actually sold. So breaking off a lot of correlation on my end, as I use correlation as one of my rather source of confirmation or confluences. But I'm very much aware, for those who are gonna comment, yes, correlation doesn't happen always. It happens almost 80% of the time, and 20% of the time it does not happen, of which that was the 20%. But out of the moves for this year and last year, gold and NASDAQ have been correlating positively, as well as USD JPY negatively. But I want to show you then how I turned that luck for me. So I did enter sells on NASDAQ, and I also entered sells on gold, which hit a stop loss. So let me just show you now how I turned that into a very profitable trade. Okay, so realizing where we were in terms of once the market of course took that. Okay, so we did have that structure. In fact, let me label it right over there. That was a break of structure at that time when the market was breaking off. It was a bullish trend, but I wasn't anticipating that the market can actually sell a bit further before it buys off. Okay, but of course the market just rallied all the way up, taking up that structure. So I was seeing this, that it should actually sell. I know when you look at it right now, it seems quite very obvious. I'd also put a trend line over here, that the market should be selling. If it spiked, I wasn't expecting it to spike all the way up to that where it came out of that trend line. Nevertheless, I don't actually use trend lines that much. But of course, when it kicked me out, I was alright. I was quite fine with my profits that NASDAQ made me. But I realized what it did over here. It actually displaced, of course, this whole market structure, and gave us change of character over here once it started selling back. I didn't catch those major sells, by the way. I want to be honest with you, because I was already off the market. But once the market started to pull back, okay, so this was about Monday here, once the market started to pull back. So Friday the market sold. On Monday, when the market started to pull back, I was like, oh yeah, this is now a perfect setup that I can look at. And I like to trade this kind of setups. They're called fair value gaps and breakup. So you can see that there's a clear fair value gap right here. I don't know how many years I've been teaching this, but so many of you guys have not really grasped this kind of setup. Okay, so we can see that this long candle is the one that broke this last higher low. We can also see, if others want to participate, or rather to say, well, that was not a higher low, we can also see right here it also broke that last part over there. If we can just make sure that was the last higher low. Nevertheless, I'm taking this one over here, and we can see that once I actually draw, so I took it from that point all the way to that. So I was just taking that piece of price action there. So this piece of price action where the market broke structure to also right here. Okay, and of course I can just simply mark that. Let me just mark it for you guys. Mark that as a fair value gap and a breaker. And of course, when the market pulled back into it, I was able to pull in the trigger and make back the money that I lost with a way better move. Okay, I did not get in all the way there. I just waited till the market touched supply previously, and I did put my stop loss a bit to have room to breathe round about here, because if I said the market has to pull back, at least it can pull back to these areas. So hence I put it just a bit further off, so that if it, it went against me at least all the way here, then it drops. If it went above this, it was initially just gonna take highs, and I was gonna accept another loss. Okay, let me just take away this and just show you. And of course, my take profit, the way I set it on this was just to place it all the way on this lows right here. So that was a 1:2, and of course I did make back what I was planning to actually make from that NFP. Okay, so that was the gold setup. What I'm trying to teach you over here is that any situation or like a loss that happens in the market does not define your week of trading or your month of trading. Losses do happen, even though you apply all of the strategy the way you should apply it. I keep on using the same strategy over years, and it has a ratio and a probability. Sometimes it loses, some months it loses, and some months it makes more. The real matter of that is that I need to capitalize once it starts making profits for me, and that is realistic trading. We are not saying 100% here we never lose. I would be a complete liar. Now let's go to NASDAQ over here that I want to show you, and I'm going to keep on pumping these episodes together with news trading, so I will call it School of News Trading. So do subscribe for that. I might probably do a boot camp. I'll let you know about that, where we do a school of news trading, right, where we teach you guys, because there's a high demand of news trading. A lot of people just want news trading, not technicals, they just want news trading. So for those who have been DMing us, make sure you still stay in our DMs right there. We'll let you know when this boot camp is ready. Okay, so over here, of course, I did catch on sales. I didn't hold them all the way, so I did catch sales during NFP on Friday. Where is that NFP Friday? There we go. Okay, so this was NFP Friday, and those sales went all the way down. I was happy, and I was out of that market within about 5 minutes. I was out of that trade. Then of course the market sort of just played along, gave more profits on that Friday, and of course when we opened on Monday, I didn't take any trades until today, Tuesday. Okay, today, Tuesday, right here, where I saw, okay, the market is giving us a pullback over here, and there is, if we can go all the way to the H1, okay, we do have price action that I was, congested, if I can use that word, lack of a better word, and I can see that price action right there. Okay, I will also show you how I was able to be confident about taking sales over there. Okay, so this trade is still going. I'm targeting, let's just see, 1:3 as well. So I have multiple take profits where the market is hit already, so that's all right. This was not a take profit. Okay, so let me just show you in terms of what I just did to just also confirm. I also used the Fibonacci over here. Let me just show you. So this Fibonacci, we actually did use it. I stretched it all the way there, and as you can see, this zone was exactly at 50%, and that's why I was able to be confident that it is not just any other zone. So if you find yourself confused about which zone to pick out, a Fibonacci is the best way to pick out which zone the market will react off. Of course, now there's some other tips that I cannot just share here on YouTube, but yeah, there are more pointers that we have that I knew for sure. I'm not just gonna take it from here to here. Also, the higher time frame, the volume of the market, that's one point I can share. The volume of the market tells you that it's not just gonna pull back all the way up, it's just gonna turn around here at 50%. And as you can see, I did place my entry right here. I didn't place it at 50%. Lately I've been missing amazing trades because I've been putting my entries at 50%, and the buy limits and the sell limits never get to trigger. So I was like, you know what, even if the market goes in that 50% and still sells, I'm alright, I'm still in. Okay, so that was the case here. I just put it at the beginning of that supply, and of course we are currently in profits, we are cruising in profits. But of course, it's not about my profits, it's about you learning from this episode. This is School of Sniper Entries, and of course I think this is the first episode coming back over here, and hopefully you take notes, you take screenshots of this, look for this kind of setups on your markets daily. It works on any other markets, whether it's currencies or just NASDAQ or gold. Apply there. And of course, thank you so much for watching this video. Make sure to subscribe, like, and also share this video with your friends and family. God bless you.